Hi there, Stan the Annuity Man, America's annuity agent, licensed in all 50 states, including that beautiful one you're sitting in. Today's topic is a weird one, but one that we need to talk about. How do you save taxes on retirement income? We all hate taxes, yet we're all patriots. How's that possible? But we need to talk about that. We need to talk about your retirement income, what you're going to encounter from our friends at the IRS, how to plan for that after this. So how do you save taxes on retirement income? First of all, let's get something very clear. I'm not a tax advisor, and you should always seek qualified tax advice. That means CPA. That means a tax lawyer. Do not take anyone's advice on taxes except for those people that are qualified, that have taken the test that gives them the checkbox to be able to talk about it. I have a good friend who's a lawyer who specialized in taxes. My question to him was, really? Like you chose that? Like you chose to go 2 or 3 years just doing tax law? Well, I just love it, Stan. I'm like, me and you, I don't know who you are. I mean, you're like an alien to me. But he's the guy that I go to for tax advice. So let's talk about, from a layman's standpoint, Stan the Annuity Man, 3 decades of experience in this crazy world of finance, now focused on the fixed annuity and dominating the space. But let's talk about taxes. Number one, for those of you that say, well, that's an easy one, Stan. I'm just going to get a Roth IRA and everything after that's tax-free. Okay, as the kind of like the album thing, you've already paid a bunch of upfront taxes for it to become a Roth. Secondly, you trust the people that are promising that the Roth rules will never change, and I hope that that's the truth. I mean, I really do. I hope that's right. But remember, there was a time where the politicians said that Social Security would never be taxed. Politicians have an interesting way of finagling around what they promised. So if you have a Roth IRA and you buy an annuity inside of it, tax-free income. Or you have dividend stocks inside of that, tax-free, or whatever. So Roth IRA, but I'm going to put that to the side because I'm not as trusting of our friends in DC not to change the rules. I want you to envision something. I hope this never happens. You got Johnny Politician. Johnny Politician, he's standing up there talking about affordability, and he's talking about the evil rich, and he's talking about all of you people that don't think you're the evil rich, but you qualify as the evil rich. And they say the following, you know, these people, like Peter Thiel, who have a $5 billion Roth. He does, by the way. Look that up. These people, that's not fair. That's not fair to everyone else. Well, what they forgot to put in the sentence was that you, the Roth owner, paid an upfront lump sum choke a horse amount in taxes to make it a Roth, to convert it into a Roth. But can you imagine that? Because Roth IRA voters are nothing, that's a voting block, and it's very, very small. If you're going to do Roth conversions, don't do the whole ball of wax. Do some, if that's what you want to do, and the math makes sense to you. Run the math numbers. So that's one way that people, well, I'm just going to get tax-free income. Yeah, but player, you've already paid taxes on it. So that's kind of a... The other part is again, I don't sell these anymore. I did when I was at Morgan Stanley. You could do AAA municipal bonds. That's a tax-free income that you can get. I'm not giving financial advice because I don't do that anymore, but this is just 30,000-foot stuff here. So you could do that. But what I really want you to come to the conclusion of is, let's not try to not pay taxes. Let's try to not pay as much in taxes because we all have to pay taxes. I guess, well, most normal people do. I'm sure there's these uber super rich that's figured out how not to do it. Corporations, you know, I guess, that's another story. But the point is, we're talking about me and you. We're talking about us pedestrians out here. How do we do that? Well, the hope is that your tax bracket, as you go into Chapter 2 is about you. Chapter 2 is about your income floor. Chapter 2 is about doing nothing or doing something or doing anything. But it's on your terms. That's Chapter 2. Hopefully, your income tax level is lowered because you're no longer doing that. Now, how will the government make up with that? I don't know. Property taxes, gas taxes, whatever. They can do that. So what I'd rather you focus on, not the tax part, but the income part. What is your income floor? In addition to Social Security, the best inflation annuity on the planet that you already own and everybody out there with a Social Security number already owns. That's part of the income floor. Required minimum distributions, yes, that's an annuity type payment because when you reach that age of RMDs where the IRS is tapping you on the shoulder, that lifetime income stream, as long as you're breathing, you got to pay. As long as there's money in the account, you got to pay. That's an annuity. If you have a pension, if you're one of the 9% out there that has a pension, great, that's an annuity. That's part of the income floor. And you're going to be taxed on that, period. End of story. When I was with Morgan Stanley, we could get a lot of very good municipal bonds back in the day. From what I'm hearing from my friends that are still there, my partners my ex-partners who I'm still good friends with, and they're still with those big firms, they really can't get that inventory anymore. So I don't know what you do with all that. And I'm certainly not in that world anymore to even give good advice. But if you need to have an annuity advisor and you need a non-annuity advisor for investments, because annuities aren't investments, they're transfer risk contracts. Non-correlated, meaning not attached to the market. You should never buy an annuity for market growth, stock market growth, upside potential. Just don't listen to that. But when you talk to your other advisor, or if you're self-advised, you can do the research yourself. I mean, you need to look at all of that from an income standpoint. What's creating income on that side? That's non-annuities. And do you need annuities to create income? Annuities can create income two different ways. You can have lifetime income stream annuities, which are SPIAs, DIAs, QLACs, and income riders. SPIAs, single premium immediate annuities, DIAs, deferred income annuities, QLACs, qualified longevity annuity contracts, and income riders. And you can also take a MIGA, which is the annuity industry version of a CD, and peel off interest. That's not lifetime income, but it's still income coming into your bank account. That's the way to do it in the annuity world. Okay. Now, if you're on the investment side, you might want to look at and talk to your advisor, say, okay, tell me about treasuries and tell me about munis and tell me about preferred stocks and tell me about dividend stocks and tell me about bond funds. Have them answer those questions. That's what they do. You know, my preference is you're using a fee-only advisor, not a fee-based. Fee-based, they can sell product and do advisement. I'm not sure I totally agree with that. And the other thing I'm going to tell you just real quickly is the word F, that stands for fiduciary, doesn't mean that what they say is 100% correct. Someone told me that, well, are you a fiduciary? I said, no, but I got a plaque on the wall that says I'm a really good guy. Is that sufficient to you? Because that's in essence what it says. In the financial business, we shouldn't have to have a plaque on the wall to say that we're doing the right thing for the customer, that we're putting the customer's interest ahead of ours. We shouldn't have to get certification and an F word, the new F word, and a plaque to say, well, yeah, he's a fiduciary. I don't care. Is he honorable or she honorable? Are they going to tell you the truth brutally? Period. You don't need a plaque on the wall for that. Okay? If you need that, then you bought it hook, line, and sinker. And there's some great fiduciary advisors out there, but we've run into some scoundrels as well, just like anything. There's good people in the annuity business. There's a ton of scoundrels. People just selling one product and selling hopes and dreams and unicorns chasing the butterflies. So when you're looking at income for retirement, when you're building that portfolio for your retirement, it needs to be kind of a two-headed monster. It needs to be the annuity side that you look at, and we can help you out at theannuityman.com, or your advisor, the market side, okay? Don't make it difficult. Financial business is not difficult. Only the people in it make it difficult. If you can't explain it to a 9-year-old, no offense to 9-year-olds, don't buy it, either side. Okay? Do me one last favor. Above me, hovering above my head, is a link. Hit that link. It tells the story about the Annuity Man, us, who we are, why we do what we do, the protocols we have in place, the standard operating procedures that are pro-customer that you need to know about, the things that you can get for free, etc. Like this hat, but I'm not going to tell you how if you go to our site at theannuityman.com. I'll see you next time.